Good morning, ladies and gentlemen. How are you all doing? Hope you had a lovely day yesterday, and welcome to the monthly closing show of Daily Dossier Ask Abhishekraj. I'll gear you up with all that you need to know in today's trading session and how you should be planning in times going ahead. Because today's trading session is going to be very, very important because this is monthly closing. Yes, this is the last session of the month, and the monthly charts will form how they look like, what to expect from markets in in coming months. And the data that I'm able to see is pretty interesting. I'm going to share with you what exactly you need to be looking at. So starting with how indices did, the markets was kind of flat to negative. If you look at Nifty, it was only 0.05% negative, wherein banking index was a loser. Banking and financial did pretty bad yesterday. PSU bank fell over 2%. Overall bank nifty fell over 1%. Private banks fell over 1%. Reality was negative. Energy was negative. Financial services 2550. FMCG, all the major indices were negative. The only couple of indices positive were IT and metal. So apart from IT, metal and auto, all other indices was broadly negative. Volatility was marginally higher. Remember, in coming few days we have lots of events planned, like US presidential elections debate. And then we have the NTPC policies from United States, from India. Apart from it, as it's the last day of the month, we would have auto sales numbers in tomorrow's session. So see, auto sales numbers also reflects how our manufacturing sector did. So auto sales numbers are going to be very important as well. So this is what majorly you need to keep in mind. Now let's take a look on charts, because today charts are going to be special. I'm going to tell you certain things which will help you plan your investments, not only in today's trading session, coming some time as well, because this is a time when you have to plan. This is a planning phase. See, in anything that we do, we have got a data analysis, then we do the planning, and based our action points, we take the actions. Don't jump in directly on the actions and buying and selling. Planning is the most crucial part. Post that action comes, and you have to be very, very disciplined on the actions. Today I am emphasizing this because this is how the data is telling us. And as we do not believe in predicting the markets, we believe in reading the markets. So now with this message, let's take a look on how Nifty looks. Now, if you look at this particular charts, I have circled the last two bars. So this is the monthly chart of Nifty. If you take a close look at the chart, the last candle had covered the entire low of the previous candle. So when Nifty fell to 10,800, it was about to form a bearish engulfing chart pattern. However, it did not do it. It recovered from 200 days moving average. So that's one thing positive. Second positive thing, you see the red line, that's the 20 days that's the 20 period moving average on monthly chart. So it's basically an average of last 20 months. Now if you look at how Nifty has performed after taking a support on monthly charts, 20 moving average, it has given a rally anything between 25 to 20-25%. So that's another thing positive. Now third thing that needs to be looked at, the RSI is also above 40, so that's also positive. So we have got good 3-4 data points which are positive. However, one thing to notice, if you closely look at the last candle, it's forming a kind of spinning top chart pattern. Now, spinning top chart patterns at the end of any trend has potential to change the entire trend. Yes, that's very important. So this is the only thing negative on the monthly charts. Rest everything looks perfectly fine. Also, we have given a rally for 5 months. Markets needs to cool off, and it did fell to 200 days moving average, took support, so pretty much looks okay on the monthly chart. Now let's take a look on the daily chart. On the daily chart, if you look at the blue and the red line, they have touched together. Now what happens when these things usually happen? I have also marked arrow on two different points. Basically, when 20 days moving average falls below 50 days moving average, it's a death cross. Now, what is a death cross? 20 days moving average going below 50 days moving average, that's a death cross, and vice versa. That is 20 days moving average crossing the 50 DMA from bottom to top. That's a golden cross. So I have marked arrow on 3 such crosses. The first death cross, Nifty made around 12,000 levels. You see what happened? Nifty went to 7,500 levels. Then you see the first golden cross made after that in 2020 was Nifty around 8950. You see what happened? Nifty went to 11,800. So this is how powerful this particular pattern is. All I'm trying to say, this particular, you need to wait and watch to see whether Nifty sustains 11,350. And you need to also be sure that this chart pattern does not get formed, because this is already formed on Bank Nifty. I'll be showing you chart of Bank Nifty as well on the coming slide. So what I'm saying is, certain very positive and certain very negative things are shaping up together. Also, if you look at the RSI at the bottom, we have an RSI, a V-shaped recovery, so we cannot ignore that as well. The recent low of Nifty is very important. Now, this is what you should be keeping in your mind. This is how you should be planning yourself. Unless and until Nifty is trading below 11,350 levels, don't take any aggressive bets and don't go short as well. Wait for a couple of sessions. Let us see whether Nifty recovers and this death cross does not form, because in case this 20 days moving average will not go below 50 days moving average, it will take support and we can see another round of good rally. Nifty has already given a V-shaped recovery from 10,800, plus we have lots of positive things shaping up on the monthly charts, plus it's a V-shaped recovery. RSI did not sustain below 40, that's also positive. So at this point of time, if I were you, wait and watch, stay hedged on your long positions. Now let's take a look on Bank Nifty. So this particular chart is Bank Nifty's monthly chart. If you take a look at Bank Nifty's monthly chart, it has already covered the previous month. Now what I'm trying to say is, in case we see any negative closing today, it will be forming a bearish engulfing chart pattern in today's trading session. However, the positive part is Bank Nifty's monthly RSI is very close to 40 levels. So unless and until it goes below 40, we cannot be bearish on a monthly basis. Rather, it could be a sideways movement on Bank Nifty. Also, if you look at the Bollinger Band, both the bands are approaching close. So it also means that volatility somewhere is decreasing. So that's positive. Now let's take a look on Bank Nifty's daily chart. On Bank Nifty daily chart, death cross is already there, so I would suggest do not be aggressive unless and until you have any closing above 22,080 levels. Rather 22,400 levels is what I would personally want to see. I would want Bank Nifty to go above 50 days moving average with good volumes. Only then I will go aggressive longs. Rest, the RSI has touched 40 from below. Currently it's below 40, so it's very important to see in couple of sessions whether the daily chart RSI goes above 40. In case that happens, it will again be a sideways. So on monthly chart we already have RSI above 40, but again approaching 40, so that's a sideways market. In case daily chart RSI goes above 40, that will also be a sideways market. So broadly, the negativity that we are looking at from the death cross can be negated, and we could rather be getting into a sideways market instead of a trending market or any dip. Rest, factors are still there which are negative, factors are still there which is positive. So you need to be taking some hedging bets for your long positions, for your portfolio, and wait and watch to see whether this shapes up into a negative view or a positive view. For now, it's neutral to positive view, and that would be all how you should be looking at Nifty and Bank Nifty. Now, certain interesting facts on other indices too. We have already discussed Nifty, we have already discussed Bank Nifty. Now let's take a look on how the other sectors doing. Nifty, Bank Nifty, I said the view is neutral to positive, no trade. Metal index view is positive. However, just like Nifty, in metal index as well, the 20 days moving average has touched 50 days moving average. So in case we have any fall, we could see a death cross on metal index as well. Nifty IT is positive, but it looks like into a cluster resistance range. That's 20,200 levels. That's the resistance of Nifty IT, what I would recommend is wait for a dip to buy or a breakout above 20,200 Nifty IT index, then look for any buying opportunities into IT stocks. Pharma is positive to sideways. Look for stock specific opportunities. Nifty index view is neutral to positive. However, death cross has been made again on Nifty energy. Auto index, be very precautious because a spinning top has formed. MACD is bearish. It did take support on 20 days moving average. You should long only above the index levels 8,025. Till then, I would suggest avoid auto stocks. Spinning top after a good trend again may revert the entire trend as well. Now, this is what I was trying to say, that we have other indices to look at. See, Bank Nifty is already into negative territory from the death cross perspective. Energy is into death cross. Metal may be forming a death cross. Pharma is showing sideways movement. So broadly, all the indices, Nifty IT again showing signs of reversals, and even RSI divergence is there. And plus we also have IT is into resistance range. So my point is, lots of major indices which drive the market. See, what are the market driving indices? Banking and financials, metals, IT. These are the biggest contributors, and energy, of course. These are the four biggest contributors in overall market. So my perspective is, lots of sectors are showing kind of losing their steam from the uptrend rally. So we may witness in coming some time or coming few months a good sideways movement. Also, we have presidential elections in US in the month of November, so October could be a wait and watch situation. So this is all about Nifty, Bank Nifty and other indices. This is how you should be planning yourself, your trades, your positions, your portfolio. Rest, you can always get back to me, get in touch with me during market hours in case you need any inputs. Now let me share some stocks. Again, these are the stocks that you need to keep a watch on in case markets show positivity or negativity. Accordingly, take your positions, and these are just the stocks to be kept on a radar. These are not the trades, because trades are shared on real-time basis with our clients. Now on long radar, you should be keeping Appollo Tire, Asian Paint. We already have a long position, so continue long, modify your stop loss to 1906. Eicher Motors, continue long, stop loss would be 2100. Grasim, you can go long with stop loss 695. Heromoto, go long with stop loss 2960. Short radar should comprise of majorly banking and finance stocks and some PSUs as well. So that will be Bajaj Finance, Bajaj Financial Services, Axis Bank and NTPC. These should be your short stock radar. So hope this is going to help you in today's trading session, and it will help you to plan your portfolio in coming months as well. So that would be all from my end in today's session. Wish you all have a great trading day ahead. Abhishekraj signing off. Stay healthy, stay wealthy, and don't forget to like, share and subscribe.